Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial secrets that companies try to hide in plain sight. Today we are looking at Reliance Global Group Incorporated, and let me tell you, there are some interesting moves happening with their stock and warrants. Alright, so Reliance Global Group Incorporated, or Rely as you might see it, has put out a report detailing a pretty significant event that happened on the 29th of January 2026. It's all about a big stock offering they closed. Think of it like this, they sold more of their company to raise money, and along with that, they tossed in some special options called warrants. This filing talks about their common stock, which has a par value of $0.086 per S-share. Now, par value is a bit of a technical term, but basically, it's the minimum price at which a company can initially sell its stock. It's more of an accounting thing than a reflection of the actual market price. Then we have these series warrants. These are basically options that give the holder the right, but not the obligation, to buy shares of the company's stock at a specific price in the future. It's a way for companies to sweeten the deal when they're selling stock. The company's common stock is traded on the Nasdaq Capital Market under the ticker symbol ESRA, their warrants. The series of warrants are also traded there under RELU. This tells us these securities are available for public trading, which is good for liquidity. So the main news here under item 1.01 is about a material definitive agreement. This means they entered into a significant contract. Specifically, on the 29th of January 2026, Reliance Global Group Incorporated, which we'll just call the company, closed its public offering of stock. They sold a little over 7.4 million shares of their common stock. Now, they also offered pre-funded warrants. Think of these as a way for investors who wanted to buy shares to get them immediately, but perhaps avoid certain registration requirements or taxes associated with buying shares directly. It's a bit of a financial engineering move. What's really interesting is that for every share of common stock or pre-funded warrant that people bought, they also got 2 common warrants. That's a lot of warrants. This means for every 1 share sold, there are potentially 2 more shares that could be bought later, significantly increasing the number of shares out there. The price for each share or pre-funded warrant along with its accompanying warrants was $0.27. That's a very low price, suggesting this is likely aimed at smaller investors, or as part of a strategy to inject a bit of capital without significantly diluting existing shareholders in the short term. If the warrants are not exercised, these common warrants are ready to be used right away, meaning investors can exercise them to buy stock at $0.27. Per S-share, they'll expire 2 years from when they can first be used. This is a key detail because it means investors who bought in could potentially make money if the stock price goes above $0.27, and they might be motivated to push the price up. The deal was handled by H.C. Wainwright & Company LLC, acting as the placement agent. They basically worked to find buyers for the securities. It sounds like they didn't have to guarantee selling certain amounts, which suggests they were acting more as a facilitator. From this offering, the company brought in about $2.0 million before they paid off fees and expenses. So after costs, the actual cash they have in hand will be less. This isn't a huge amount for a public company, so it signals they might be looking for strategic ways to grow or manage their operations. The money is earmarked for working capital, which is pretty standard, basically the day-to-day cash a business needs. More interestingly, they mention M&A strategies. That means mergers and acquisitions. They are looking to potentially buy other companies or merge with them, which can be a big growth driver but also carries significant risk. Besides the cash fees, the placement agent H.C. Wainwright also gets placement agent warrants. These are warrants given to the agent as part of their compensation. They get warrants to buy about 7% of the shares sold in the offering at an exercise price of $0.3375 per S-share. This is 25% of the offering price, meaning they only make money if the stock goes up significantly above the initial offering price. Now, something important for investors to note are the lock-up agreements. The company's officers and directors have all agreed not to sell any of their company stock for 30 days after this offering closes. This is a pretty common practice to prevent insiders from selling right after a dilutive event like this, which could depress the stock price. The company itself has also agreed not to issue any more stock, like securities, for 30 days. This is to give the market some breathing room after the new shares are out there and to prevent further dilution in the immediate aftermath. This whole offering was done under a registration statement filed with the CSE. This is the formal process companies go through to register securities for sale to the public. The filing number here is 333 to 292,895, and it was declared effective on the 28th of January 2026. Moving on to item 8.01, this section covers other events on the 28th 28th of January 2026, the company released a press announcement about the pricing of this offering, and then on the 29th of January 2026, another one announcing that it had officially closed. These press releases are part of the filing as exhibits, which means they are included for reference. Under the exhibits, we see the form of the common warrant itself, the pre-funded warrant, and the placement agent warrant. These are the actual documents that define the terms of those warrants. They were incorporated by reference from an earlier filing. Here we have the press release from the 28th of January 2026 announcing the pricing of the offering. This is where they would have first signaled to the market the terms of the deal. And then the press release from the 29th of January 2026 marking the official closing of the offering. This is when the money was exchanged and the securities were delivered. Finally, the report is signed by Ezra Bayman, who is the Chief Executive Officer. This confirms that the company's top leadership is aware of and responsible for this filing. So, what does all this mean for Reliance Global Group Incorporated? On the surface, it's about raising capital, which is a necessary function for many companies, especially those eyeing growth or acquisitions. The $2.0 million raised isn't massive, but combined with their stated intention for M&A, it suggests they are looking for strategic moves rather than just operational funding. The significant number of warrants issued, however, introduces a lot of potential future dilution. The number of shares outstanding could more than double. For investors, this means the stock price needs to perform exceptionally well to overcome the increased supply of shares. The exercise price of the common warrants at $0.27 and the placement agent warrants at $0.3375 gives us a clear target. The stock needs to consistently trade above these levels for those warrants to be profitable for the holders, and for the company to potentially raise more capital through warrant exercises. The 30-day lockup periods for both the insiders and the company itself are intended to stabilize the stock price in the short term, but the real test will come after that period. The company is clearly in a growth-oriented phase, possibly looking to acquire smaller players or integrate synergistic businesses. However, the associated risks of acquisitions, coupled with the potential for substantial share dilution from these warrants, are significant. It is a classic high-risk, potentially high-reward scenario. The company is betting on future growth to justify the dilution. Whether that bet pays off will depend on their execution of their M&A strategy and overall market conditions. Alright, that is our breakdown of Reliance Global Group Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.